Okay, let's unpack this. You might think of Oracle as, well, that traditional tech giant, right?
Hmm.
Primarily known for databases. Maybe seems a bit quiet in the headlines sometimes.
Hmm.
But our deep dive today into their latest annual report, that's the Form 10K for fiscal year 2025, it's actually going to reveal a pretty surprising story.
Yeah, the 10K, it's always packed with detail. For anyone not familiar, it's basically their big annual report to the SEC.
Yeah.
Real gold mine of info.
Exactly. And our mission today is sort of cut through the jargon, We want to show how Oracle, maybe the traditional database king, is actually kind of quietly undergoing this massive, aggressive transformation.
It really is fascinating. They're becoming a cloud infrastructure powerhouse.
It's a huge strategic pivot. It's reshaping their future, and honestly, it underpins so much of modern business already, even if people don't always see it.
It's a compelling case study, for sure. You're watching this like long-established player, Oracle, not just reacting to change, but really strategically navigating this incredibly fast-moving IT landscape.
Right.
They're a huge force in enterprise tech, and uh, this really significant multi-billion-dollar pivot to the cloud, it says a lot about their adaptability
Yeah.
and their ambition, frankly.
Yeah, ambition is the word. So we're going to pull out the most important insights, look at their business segments, dissect the financials, shareholder value strategies, and, try to figure out what's next for this titan.
Sounds good.
So that adaptability point is key. Let's unpack what Oracle's core business actually looks like now after all these moves.
Well, at its heart, Oracle is still about providing comprehensive enterprise IT solutions. That means everything from, the software applications businesses run on to the infrastructure that holds it all up.
And a big part of it is their flexibility, right? They don't just push one model.
Exactly. That's crucial. They offer on-premise, cloud-based, and hybrid options. So customers get a real choice depending on their needs.
Which is vital for their, huge existing customer base.
Absolutely. That flexibility is key. So when we look at their business, it really breaks down into three main pillars: cloud and license, hardware and services.
Okay.
But for fiscal 2025, the story is overwhelmingly about one of those segments really taking charge.
And which one is that? Which pillar is driving the growth, and just how dominant has it become?
Oh, it's cloud and license, hands down. It's become the absolute dominant force. We're talking a massive 86% of Oracle's total revenues in fiscal 2025.
86%. Wow.
Yeah, and that's up from 84% the year before in 2024.
Yep.
So you can clearly see that accelerating trend. This isn't just their core business now, it's really their growth engine.
Okay, so let's dive into that cloud and license segment then. What are the main parts, and what's the big shift happening inside it?
So essentially, this segment shows this really powerful strategic shift. Traditionally, Oracle sold perpetual software licenses. Right? You buy it once, own it forever.
The old model.
The old model. Now, they're aggressively moving towards cloud services. These are subscription-based. So think less big upfront payments, more predictable, recurring, and importantly, growing revenue streams for the future.
Makes sense.
And the key indicator of this shift, cloud services revenues themselves hit 43% of total revenues in fiscal 2025.
43%.
Yeah, up significantly from 37% in 2024 and just 32% back in 2023. So that trend is definitely expected to keep accelerating.
So what's really driving this, though? Beyond just saying customer demand, does Oracle have some kind of unique advantage here?
Well, it's not just generic demand. This is Oracle, I think, uniquely leveraging its deep ties to its existing on-premise customer base.
Ah, okay.
They're acting as a trusted migration partner, not just another cloud vendor trying to win new business. They know these customers. They've had relationships for decades, and they're actively facilitating what the report calls a material migration of these businesses onto the Oracle Cloud.
A material migration, so they're bringing their base with them.
Exactly. And get this, over the past 3 fiscal years, customers moving from those old license support contracts to Oracle Cloud. They added a significant $4.3 billion increase to Oracle's annualized cloud services revenue.
$4.3 billion just from migrating existing customers.
So that's a huge competitive moat for them right there.
Definitely. And when we talk about their key cloud offerings, you mentioned OCA and OCI. What are those, and which one's really lighting the fire under that growth?
Right. So OCA is Oracle Cloud Applications. Think of their big enterprise software like Fusion ERP, but delivered as a service. OCI is Oracle Cloud Infrastructure. That's their direct competitor to AWS or Azure, providing the basic computing power, storage, networking.
Got it.
And what's really telling is that infrastructure cloud services, OCI, drove a whopping 74% of the growth in cloud services and license support revenues in fiscal 2025.
74%. So it's really the infrastructure side that's booming.
It highlights just how vital OCI has become. They're not just selling the apps anymore. They're building the whole foundation, the highways those apps run on.
But it feels like they're also trying to push this beyond just the huge companies now.
Yes, absolutely. Oracle is actively pushing OCI and OCA out to a much broader market. They're trying to sort of democratize access to their cloud.
So who are they targeting?
Small and medium-sized businesses, even non-IT departments within companies, developers, partners, and they're emphasizing things like it being highly available, intuitive design, ease of access, low touch, and low cost.
Right, trying to make it seem less intimidating, maybe.
Exactly. It's a clear strategy to broaden their appeal way beyond their traditional big enterprise clients.
So while cloud and license is clearly soaring, what about the other two segments? Hardware and services. Sounds like they're in transition.
Very much so. The hardware segment that includes things like Oracle engineered systems, servers, storage, its share actually decreased. It's down to 5% of total revenues in FY25.
Just 5%?
Yeah, down from 6% in 2024, and revenues actually declined by 4%. It's a direct result of Oracle's focus shifting so heavily to cloud infrastructure. They're kind of moving their own game to the cloud, making their own hardware less central.
And what about services, the consulting side?
Similar story, a slight decline. Services represented 9% of total revenues in FY25, down from 10% the year before, and revenues also decreased by 4%. This segment also typically has lower operating margins than the cloud and license businesses.
So supportive, but not where the growth is.
Right, it's there to help customers, but it's not the engine.
Okay, so to fuel all this cloud growth and expansion, they must be making some huge investments underneath it all.
Oh, absolutely. They are pouring serious resources into research and development R&D. It totaled $9.9 billion in fiscal 2025.
$9.9 billion, that's huge.
It is, and up from $8.9 billion in 2024. This isn't just, generic tech spending either. It seems really focused on exploiting their full stack advantage.
What do you mean by full stack advantage?
Well, because they build both the applications, OCA, and the underlying infrastructure, OCI, they can potentially optimize things like AI workloads end to end. That could give them a performance edge that maybe a pure cloud provider or just an application vendor can't match.
Interesting. So controlling more of the process.
Potentially, yeah. And beyond their own R&D, they're also actively using acquisitions as a strategic tool. The report calls it a selective and active part of their strategy.
So how do those acquisitions fit in? What are they buying?
They use them to enhance their products, expand their customer base, speed up innovation, and ultimately increase shareholder value. They explicitly say they expect to continue doing this. So it's not just about growing organically. It's about strategically bolting on capabilities to accelerate that cloud vision.
Right, buying pieces to fit the puzzle.
Exactly.
Of course, you can't do a transformation like this just with money and machines. It really hinges on people, right? Their human capital strategy must be critical.
Absolutely critical. How are they making sure they have the talent for this massive cloud build-out? Well, they emphasize their global workforce, 162,000 employees as of the end of May 2025.
162,000.
Yeah. They talk about attracting and retaining talent, but also encouraging internal growth. Actually, 29% of their non-entry-level jobs in fiscal 2025 were filled internally.
Almost a third. That's pretty significant.
It is. It shows a commitment to developing their own team, fostering career paths. That kind of internal pipeline is really vital for keeping knowledge and continuity during such a big shift.
Okay, so let's talk money then. The top line, Oracle's overall revenue performance in fiscal 2025 sounds pretty strong.
Yeah, it was robust. Total revenues surged to $57.4 billion. That's up 8%. A really solid indicator that the strategic shift is paying off on the top line.
And where did that growth come from geographically?
Mostly the Americas. They led the charge, contributing 74% of the total revenue growth. Then EMEA was next at 19% and Asia Pacific at 7%.
Okay, now moving down the income statement. What about expenses? All this growth must cost something.
It does. Their total operating expenses, basically. The cost of doing business, they rose significantly, up by $2.1 billion, or 6%, hitting $39.7 billion in FY25.
And where did those costs go up most?
Unsurprisingly, the main drivers were in cloud services and license support. That reflects higher infrastructure costs and more employees needed to support that massive cloud growth. And also in R&D, again, mostly employee costs and infrastructure needed for development.
But I remember reading there were some things that helped offset those increases, right? Kept profitability looking good?
Absolutely. There were a couple of notable decreases. For instance, amortization of intangible assets. That's basically writing off the value of things like acquired technology over time that decreased by $703 million as some older assets got fully amortized.
Okay.
Also, restructuring expenses went down quite a bit. They were $299 million in FY25 compared to $404 million the year before. That's mainly because their big 2024 restructuring plan, which was focused on those cloud initiatives, was mostly finished.
So some of those one-time costs related to the pivot are now behind them.
Seems like it. And all of this netted out to some pretty impressive profitability numbers. Operating income jumped 15% to $17.7 billion. That pushed their operating margin up to a healthy 31% in fiscal 2025 from 29% in 2024.
31% margin. That's strong.
Very strong. And net income also rose, hitting $12.4 billion compared to $10.5 billion the prior year. And for shareholders, diluted earnings per share climbed nicely too to $4.34 from $3.71. Solid numbers, especially when you consider how much they're investing.
Yeah, it shows they're managing costs pretty well even with all that spending.
Indeed. But for me, the real story, or often the most revealing part, is in the cash flow. What does Oracle's cash flow tell us about their bigger strategic moves? Especially that free cash flow number.
Yes. Okay, that's where it gets really interesting, isn't it? So Oracle generated a very strong $20.8 billion in cash just from its operations in fiscal 2025. That's up 12% from 2024. So lots of cash coming in the door from the core business.
A ton of cash.
Right.
However, if we look at free cash flow, which is that operating cash minus what they spend on capital expenditures like building data centers, there's a huge detail that jumps out.
Which is?
It was actually negative. Negative $394 million in fiscal 2025.
Negative free cash flow after generating $20 billion in operating cash? How?
Well, it's a stark contrast to the positive $11.8 billion in free cash flow they had in fiscal 2024. But, and this is crucial, this isn't necessarily a sign of weakness.
Okay, explain that. Because negative free cash flow usually sounds bad.
It's because of an absolutely enormous increase in their capital expenditures, their CapEx. It soared by a staggering 209% year over year.
209%.
Yep. It hit $21.2 billion in FY25, way up from $6.9 billion in FY24.
Wow. Okay, that's a truly massive leap. What on earth are they spending all that capital on?
It's a very deliberate strategic investment. They are basically building a global cloud empire. The report says this capital is being poured into the rapid expansion of the Oracle Cloud by increasing existing data center capacity and adding data centers in new geographic locations.
So the negative free cash flow isn't a bug, it's a feature of their strategy right now.
Exactly. It might look concerning at first glance, but it actually signifies Oracle's incredibly aggressive multi-billion-dollar bet on building out its cloud future. It's a strategic move aimed squarely at future growth and market share. It shows they are absolutely willing to spend big to win big in the cloud wars.
That's a powerful way to look at it, spending now for dominance later. Okay, what about debt? Did they take on more debt to fund this?
They did issue $14 billion in senior notes in fiscal 2025. Primarily, they say, to repay existing debt and for general corporate purposes, which could include funding some of this expansion. As of May 31st, 2025, their total debt stood at $92.6 billion.
$92 billion. That's a lot of debt.
It is, but Oracle states they believe their current cash reserves and the cash generated from operations will be sufficient to meet their needs. So they seem confident they can manage this debt load alongside the heavy investments.
Okay. And you mentioned strategic bets earlier. What about that investment in Ampere Computing, the chip company?
Right, that 29% ownership stake in Ampere Computing Holdings, LLC. It's more than just a line item. We know SoftBank announced a deal to buy Ampere. Until that closes, Oracle was recognizing its share of Ampere's losses. But that initial investment itself was interesting. It kind of quietly signaled Oracle's interest in potentially controlling more of its chip supply chain, especially for cloud workloads. Ampere makes those energy-efficient ARM-based processors.
Right, different from the usual Intel or AMD chips.
Exactly. So this could have been part of a longer-term play for Oracle to gain cost efficiency and maybe differentiate its cloud performance. It hints at that broader strategy of trying to control as much of the tech stack as possible, from the chip right up to the application.
Very interesting angle. So, given these huge investments, the strategic shifts, the debt, what does this all mean for Oracle looking forward? Especially, how are they treating shareholders through all this?
Well, it's clear they're still very committed to returning value to shareholders, even while making these massive investments. On the dividend front, they declared and paid out $1.70 per share in cash dividends during fiscal 2025. That totaled $4.7 billion going back to shareholders.
Okay, so still paying a solid dividend.
Yep. And for June 2025, right after the fiscal year ended, they already declared another quarterly dividend of 50 cents per share. So that consistent payout is a strong signal about their financial stability and their confidence, even with the spending.
And what about stock buybacks? Are they still doing those?
They are. They have an active stock repurchase program. As of the end of May 2025, they had about $6.4 billion still authorized for repurchases. In fiscal 2025 itself, they bought back 3.9 million shares for about $600 million.
So not as much spent on buybacks as on dividends last year.
No, much less. The program has no expiration date, and they say the pace depends on various factors: working capital needs, cash needed for acquisitions, the stock price itself. It gives them flexibility in how they manage their capital allocation.
Makes sense.
And it's worth noting, if you look at their stock performance over the longer term, Oracle's 5-year cumulative total return actually outperformed both the S&P 500 index and the Dow Jones U.S. Technology Index.
Really? Better than the tech index overall?
According to their report, yes. It demonstrates they've been able to deliver strong returns over that period, even while navigating these big strategic shifts and ramping up spending. It suggests investors have generally bought into their long-term strategy.
Okay, so looking ahead, Oracle clearly expects that cloud services revenue to just keep growing, right? And for that piece of the pie to get even bigger relative to everything else.
Absolutely, which means more of that huge capital expenditure we talked about is likely coming. They are all in on expanding their Oracle Cloud data center capacity globally.
But it can't all be smooth sailing. What keeps them up at night? What are the big challenges and risks they call out?
Well, there are quite a few significant ones. First off, just innovation and competition. That's constant pressure in tech. They have to keep developing new products, integrating the companies they buy, enhancing what they already have. It's a super fast-moving, really competitive industry.
And risks around AI specifically?
Yeah, they mentioned risks like their AI products maybe not performing as well as hoped, or competitors getting better market acceptance, plus just navigating the evolving legal and regulatory stuff around new tech like AI.
Then there are the supply chain issues we hear so much about.
Huge issue. Ongoing shortages, especially for critical things like AI accelerators, GPUs, increased production costs, relying on single suppliers for key components. The report even admits Oracle has sometimes had to accept less favorable terms with suppliers just to make sure they get the parts they need, which can obviously impact their hardware margins.
Ouch. Okay, what else?
Then there's the whole regulatory landscape. It's constantly shifting. Think about data privacy laws, like GDPR in Europe, or all the new state laws popping up in the US. Cybersecurity threats are a constant battle. And changes in tax laws, like those global OECD initiatives, could significantly impact their operations and profit.
And just the world being unpredictable.
Exactly. Geopolitical and economic volatility. Big risks there. Global economic slowdowns, political unrest. They mentioned the Russia-Ukraine war, China-Taiwan tensions, trade policy shifts, currency swings. Even things like the TikTok legislation are mentioned as examples of how political events could disrupt services for some customers.
Right. Lots of external factors.
And finally, even their acquisition strategy, while key to their growth, isn't risk-free. Integrating acquired companies is hard. There's risk of business disruption, difficulties merging cultures and systems, or just not getting the financial benefits they expected.
So yeah, complex picture. Lots of opportunity, but definitely some significant hurdles too.
Absolutely. So if you put all this together, Oracle is in this really fascinating, maybe even pivotal phase. They're investing incredibly heavily for the future, building out this massive global cloud footprint. But at the same time, they're navigating this really complex, volatile global environment. So the key question, I think, for you listening is,
considering Oracle's massive multi-billion-dollar debt on cloud infrastructure and AI, which is clearly backed by that strong operating cash flow, how do you see this aggressive capital expenditure strategy shaping their competitive position, say, 5 or 10 years down the line?
yeah, will this huge immediate investment pay off big time, especially against competitors who maybe aren't making such large immediate outlays right now?
A provocative thought indeed, especially for a company that, as you said, is definitely not acting its age.
Not at all.
Well, thanks for joining us on this deep dive into Oracle's 2025 Form 10K. We hope these insights help you navigate the ever-evolving world of technology and business.